Hi, and welcome to my personal finance course. I'm Tom Mihawk. This chapter is about health, disability, and long-term care insurance. Now, health insurance is a hugely important part of financial planning and anyone's financial literacy. It's very expensive, it's controversial. In the United States, we have the most expensive healthcare costs in the world, and we're going to talk a little bit about why that is. When you research these numbers, as I did to put this together, the numbers vary widely. It's difficult to get the exact number, so I picked the ones that were in the right ranges of the numbers that I saw. They're close enough, but the point is the US has the highest per person or per capita percentage of gross domestic product spent on healthcare costs globally. The average per person cost is estimated to be about $10,600 and about almost 17% of gross domestic product in 2018. That's GDP for the entire country. About 9% or 30 million of Americans didn't have health insurance in 2019. In 2010, 10 years ago, when the Affordable Care Act was introduced, about roughly 45 million people didn't have health care insurance. So more do today. Notice in this chart, the United States shows 16.9%, about 17% of expenses of gross domestic product spent on health care. This is relative to 12.2 for Switzerland, 11.2 for Germany, 11.2 for France. Now, when I teach students from foreign countries and ask them how their health care is, almost all say, oh, it's great, it's really good, it's fine. It's not that very costly. I get the service I want. I'm a financial advisor, been a financial advisor for 16 years, and many clients that I know from foreign countries come to the U.S. to do their important medical procedures. Maybe a year ago, I don't remember, there was meant to be a big Rolling Stones concert tour, and they had to cancel or postpone because Mick Jagger had surgery. Where did he have the surgery? New York City. Foreigners come to Texas and Ohio and Florida to do procedures. Now, that doesn't explain why the United States has such high expenses relative to other countries, but it does say something about the quality of care people want to achieve and potentially why we pay more in the United States. Why are healthcare costs so high? Healthcare spending is driven by the number of services used and the price of a service. These two things, right? Number of services and the price of the service. In the United States, the price of services appears to be the main driver of high costs compared with comparable countries. For example, in the United States, we have shorter hospital stays, fewer angioplasty surgeries. Angioplasty is where they put a balloon in and to clean out to widen out cholesterol deposits that might be in arteries around your heart. This is meant to just be an example. More knee replacements than comparable countries, yet our prices are higher. So why are U.S. healthcare costs so high? First, sophisticated, expensive technologies. Any of you watching, have you ever had an MRI for your knee? Excuse me. MRI machine is this giant thing. It's not made by some startup. It's made by GE or Siemens, who, by the way, also make jet engines. And those engines, rotate. I'm sorry, I'm an engineer undergrad. They have, very finely made ball bearings, and these things rotate at high rates of speed, and the camera moves like this, so it takes a picture that can put together a 3D image of your knee or your brain or your abdomen. So sophisticated, expensive technologies. We have administrative inefficiencies. Hospitals are being consolidated, so there's less competition. Longevity and the increasing number of older people. People are living longer, aging baby boomers. Physician and healthcare provider compensation and its high rate of growth. Our physicians in the United States are well paid. It's not like in some other countries where to have a job as a physician is admirable and esteemed, but not as highly paid as in the United States. Regulations produce cost shifting rather than cost reduction. So instead of costs going down, they're just shifted for someone else to pay. Restrictive work rules and limited competition in the delivery system, and high litigation rates and associated malpractice insurance. When my wife's and my first child was born, I was in my second year of graduate business school in Charlottesville, Virginia, and there were, I don't remember, a handful of OBGYNs available to deliver babies. Our son was born in Charlottesville as I was graduating, and all of them were leaving the practice. I mean, we were getting the services of an OBGYN right at the end of when she was leaving her practice. And my understanding at the time was they were leaving because of the cost of malpractice insurance and the high rates of litigation. So, why do we use health insurance? It reduces the financial impact of an illness or an injury. It's a critical part of financial planning. Group plans, about 90% of all healthcare insurance are group plans, and most are employer sponsored. Coverage under a former spouse's plan may be continued for 36 months. Premiums would be paid by the individual. This is a protection if you are divorced. And the COBRA laws require many employers to offer a plan after a divorce or separation from a company. Many of you will have interaction with the COBRA laws if you're laid off, or if there's a reorganization or restructuring and the company has to still offer you health care insurance, which, by the way, you have to pay for. Unfortunately, before, your company might have been paying half of the premiums or some portion, lowering the cost of your premiums. Now, if you're separated from your company, you pay the full cost of the premiums. You still have access to the health care, which is a benefit, but you pay all the premium, which is a negative. So let's talk about sufficient coverage. Sufficient coverage in what's called basic insurance includes physician expenses, which are non-surgical treatments, lab tests, things like that. Surgical expenses, which include surgeons' fees. Hospital expenses like room, board, other hospital charges. I can assure you that staying in a hospital these days is more expensive than staying in the Four Seasons or the Ritz-Carlton. I can't assure you, but I'm pretty sure that's the case. And major medical insurance covers the cost of serious injury or illness and can act as an extension to the basic insurance limits. Like auto insurance or homeowners, these are things you may only have contact with from time to time, but you should become aware of these terms so that you learn more about them and over time become capable of making decisions about what's best for you relative to these terms. So what should a good health insurance plan include? It should offer coverage for hospital and doctor bills, at least 120 days hospital room and board, at least $1 million lifetime maximum per family member, should pay at least 80% of out-of-hospital expenses after a $1,000 deductible per person or $2,000 per family. Obviously, a lower deductible would be better and pay a higher rate would be better, but these are guidelines for a good plan. Should impose no unreasonable exclusions and should limit out-of-pocket expenses to no more than $6,000 or lower than that if possible. Now, what happens is you join a company or you're already in one, and at the end of the year there's what's called the enrollment period. It's in November, let's say, and you have a 2-week period, and they tell you in advance, and you go online these days. Used to be there was a human resources person that might help you. Today, it's all done online. You go online, make your choices. What you should do is compare one plan versus another. These guidelines are a great help. They give you an idea of what a good plan should include, but you're going to wind up experimenting with different plans to find out what's best for you and what your family needs. Obviously, your plans are going to be different when you're single compared to when you have a family and children. And that's going to impact, your experimentation with your plans is going to impact what type of plan you choose. So again, just summarizing real quick, offer coverage for hospital and doctor bills, at least 120 days of hospital room and board, at least $1 million lifetime maximum per family member, pay at least 80% of out-of-hospital expenses after the $1,000 deductible per person or $2,000 per family, impose no unreasonable exclusions, and limit out-of-pocket expenses to no more than, in the research I did for this, it said 4 to 7,000, I think. So no more than 6,000 or lower would be better. This is the end of the first segment in this session on health insurance, disability, and long-term care insurance. And this is the end. And please come back for segment 2 of this same chapter. This is segment 1 of 2 in the chapter on health, disability, and long-term care insurance. I'm Tom Mihawk, and you can find me at tommihawk.com and YouTube. Please come back for segment 2.